Hello traders, welcome to Investoo.com's Fibonacci series. In this lesson we are going to learn how to trade retracements. And trading retracements is not only picking up, drawing the retracement, picking up a retracement level that you want to trace and enter the trade. That you can do, but you're going to get stopped out more often than not. In this lesson we are going to learn how to do it correctly and where to place your stop losses. So let's go to the charts and let's look at this Aussie USD 1-hour chart. Now, let's say that you are willing, or you not that you're willing, but you want to trade the long side of the market because you see that we have gone above this level, all right, and we keep making higher highs and higher lows. So you want to make a long trade on the Aussie USD. So how are you going to do that? The first thing you need to do is go back in price action and look for previously tested levels. So this was a level that was previously tested. You can see that it was tested here before we broke, tested and rejected strongly here. These two candles is one of the reasons we picked this level, because not only it was tested here, but it was very strongly rejected before we broke to the upside and tested it as support. So this is a very important pivotal level on the Aussie US dollar. So how are we going to be trading this currency pair on the long side? Well, that's easy. We are going to try to find some Fibonacci levels to trade off of. So we are going to draw the Fibonacci retracement levels, and as you can see, we have confluence between the 61.8 and this pivotal zone on the Aussie US dollar. Now, let me just delete the Fibonacci levels that we are not going to be using because it makes for too many lines on the charts. Okay, we are just going to leave the 61.8. Now, let's imagine that we are trading from this point in price action. So you already see that you already saw that price almost tested the same level, the same pivotal level we have been talking about, and now it's making another low. So what we want here is we want a true test at this level. So what we're going to do, we're going to put a buy limit right here above the pivotal level. And the reason we want to put on a buy limit is because we want to get filled on our position. Now, where our stops going to go? If we are using Fibonacci retracement levels, this means that we want our stops to be inside of a Fibonacci retracement level system. This means that you are not going to put your stops just below the 61.8. Why? Because that, my friends, is just a very simple-minded way of trading. You have to look beyond a great risk to reward scenario, because the risk to reward scenario is not created by you, it's created by the market. So where does my trade idea invalidates itself? If we break with the 100 Fibonacci level. So we are going to put our stops down here. Remember that wide stops mean a smaller position, but you can still risk 1% of your account. This means that we are going to have a nice 75 pips stop loss on our long trade. Now, let's recapitulate. We are looking for a pivotal zone or a previously tested area of support, well, resistance or support in this case, because we're going long. Another clue is this absorption candle. Instead of just testing this zone, we have a huge candle, a big absorption candle that breaks through, and then we retest the level. Okay, so we are looking for an entry around these levels. Now, if price breaks through these levels, which is the 61.8 and the pivotal zone, a long trade idea is still possible because we haven't made a new low. Now, we have the first low here. We have the let me just use another shape to point out the lows and the highs. We have, I'm going to use thumbs up. We have the first low here. I'm sorry. This is the stop loss, the first low here, then you have the first high here, and we are looking for the second lower low. If price breaks with this zone, it really doesn't matter. We are already long, but price can come and test this area right here, which I think can be in confluence with the 0.764. Let's see if what I'm saying is true. And as you can see, it is in confluence with the 76.4. So we really don't know what's going to happen, but price might test the 61.8 and this pivotal zone, and buyers can push price up, or we can break it and make a higher low lower at the 71. 79. This is why we put our stop loss below the 100 level. And this is how you enter retracements using Fibonacci levels.